Hello ladies and gentlemen, I'm Joseph Novichkov, Senior Trading Manager with GDM. Today's outlook, firstly we're going to start with the Asian stocks. They mostly lost ground on Wednesday with of course the Nikkei selling off on the back of another yen spike, as we can see on the disappointment with the country's latest stimulus plan. In Japan, the Nikkei 225 index was down about 1.5% as the government approved the 13.5 trillion yen in fiscal measures, with of course just about half of it, 7.5 trillion, in spending by the national and local governments as part of the Prime Minister Shinzo Abe's 28 trillion yen fiscal stimulus package that was announced last week, as of course in a bid to boost the economies in the country. The yen spiked higher on Tuesday after the stimulus announcement. On Wednesday, the Japanese yen, however, strengthened slightly against dollar, trading as high as 100.72 before retreating slightly to 101.06. This was, of course, with the compared levels between 104 and 106 in the previous week. Also tracking the European stocks, they opened slightly higher on Wednesday as, of course, investors digest some of the earnings and the fall in oil prices, with, of course, the Pan-European Stock 600 index that was down about 0.3%. The dollar struggled near 6-week low against the basket of major currencies on Wednesday due to expectations that the U.S. Federal Reserve will raise interest rates later rather than sooner. The dollar was, and its softness, of course, followed a weaker showing by Wall Street overnight, with the indices suffering on their worst day in roughly a month in the wake of unconvincing economic data and falling oil prices as well. Looking at the dollar index, it was at 95.2 within close reach of the 6-week through of 95. And of course, that was touched overnight. The index was at 4.5-month high of 97.57 as recently lost Monday. The euro was little changed at 1.12 after gaining 0.5% overnight to touch 1.1234, its highest since the Brexit referendum. Gold in the commodity sector is on track on its previous gains on Wednesday as Asian stocks tumbled on the weak U.S. economic data, undermining expectations of near interest rate hike. The metal has had a stellar year so far, surging about 28%, of course, as investors sought the safe haven asset on mounting economic worries. That was predominantly, of course, in the Western world. Gold was nearly unchanged this morning at 13.63 an ounce in the European trade after hitting as high as 13.6733. That was its loftiest, of course, since July 11. A report from the U.S. Commerce Department on Tuesday showed inflation was still muted in the country, which together with the anemic economic growth pace in the second quarter could, of course, encourage a cautious Federal Reserve to keep interest rates at the current levels, at least for a little while. Also tracking the oil prices in the energy sector, they edged slightly higher on only Wednesday, supported by a weaker dollar. But of course, U.S. crude futures remain below the $40 mark per barrel as ongoing fuel oversupply and, of course, stuttering economic growth weighed on the markets. Tracking the U.S. West Texas Intermediate crude futures, they were trading at $39.63 per barrel. That was about 12 cents up from their last settlement, but of course still below the $40 market and settled below for the first time since April during the previous session. The most important news today in the calendar, we're tracking the US ADP Employment Change at 12:15. It's going to give us a little bit an early reading on what's to come this Friday on the NFP data. That's all for today. See you next time. Bye-bye.